The one that scares me is the short cycle. The kind of slightly stunted. I think that was the last cycle was like that. And I think we all have PTSD, so we can deal with that one. If they take away the punch bowl a bit early, we can kind of deal with it because most people are sort of expecting it. A relatively normal cycle, I think people are fine with. My fear is the 2013 double pump. That's terrifying because that was a 45% correction mid bull market. Everybody thought it peaked because it had already done 10x or 20x or 30x, whatever the stupid number was. And then it did like another 20x from that point.
Wait a minute, everyone. Welcome to Bitcoinzilla, your platform for daily cryptocurrency analysis and news. Our mission is to keep it simple. Bitcoinzilla offers engaging information that is easy to understand. Our analysts keep their eyes on the latest news to provide valuable insights via email. Don't miss out on this opportunity. Join our community of 10,000 subscribers and experience the new edge with Bitcoinzilla. Subscribe now. In today's video, Real Vision co-founder and CEO Raoul discusses the latest market action and shares his key takeaways from how to save your future. Raoul explores the evolving tech investing landscape, the transformative impact of AI, crypto's role in shaping future wealth management strategies, and more. So without wasting any time, let's dive into the video.
One of the largest asset managers who has a large ETF in the space was like, what the hell do I do about NVIDIA and the semiconductors? Everyone's thinking about it because they know the trend is a good trend. They know it could turn into a bubble. Nobody really wants to sell the best performing equity in the world, but it's scary. My view hasn't changed. I've been long risk since November 2022. Long crypto, long tech. And just haven't changed that. And it's been stupidly good. I just kind of left my brain behind and said, look, liquidity goes up over time, over the business cycle. These are the assets to own. And it works incredibly. We've got these mega trends. Just ride them. Everyone overthinks it, over worries, short-term trades it. Meanwhile, it's printing generational wealth, not only in crypto, but in tech as well. So just don't overthink it. Tomorrow will be more digital than today. So therefore, that's the secular trend. And the business cycle, we've only just bottomed in the ISM or bottoming. So we haven't even got anywhere. So there's nothing to worry about. Of course, you will have volatility. And the other thing is you've got seasonality of election years, basically up only with, one big wiggle somewhere in the summer. Generally, I don't see anything to worry about, unless even if we go to war with somebody, they're just going to print more money and then just rise the price up. I just don't have anything to worry about. There is no perfect answer. It's actually much easier to answer the question for young people than it is for older people, right? Because it becomes very specific to your experiences. When you're young, you have a lot of probabilistic future paths, right? So you can set yourself in a decently good direction and a bit of luck will carry you. The older you are, you've got a set of circumstances. If you've retired, it's what you've retired with. If you're coming up to retirement, it's like, what is your earning power? How much time do you have? Stuff like that. So how I'm probably going to handle my panel is really questions.
Yeah.
Because I don't have a fixed answer because everybody's going to be different in mine. Well, Jared, if he's talking to a bunch of 25-year-olds, 30-year-olds, it's actually easier to answer. Doesn't mean there's a definitive, we're all going to be rich, but it's a way of thinking that's much easier. Mine's going to be more difficult. So I think I want to do it on a case-by-case basis without trying to give investment advice, but just give directional ways of thinking this through and making intelligent decisions. Because I've also seen a lot of my parents and parents' friends make all the mistakes. And I've seen some of them get it all right. And learning from others is, it's very good. What's weird is I'm a very conservative person in terms of debt and other stuff, but now I've become a risk taker because I've got the security to take risk. Because I saw what happened to it. And we talked about this in the past, Maggie. It's like, I saw what happened to my parents' friends, or seeing parents' friends. Awful, run out of money. People who've had great careers, never really saved enough for their pensions. And before you know it, they run out of money at 80 years old.
Yeah.
And they don't have anywhere to live. And if their kids can't support them, that kind of shit is bad, and I've seen it all. So hopefully I can speak with some experience.
Bitcoin could already be seeing momentum turning as institutional BTC outflows recede. The latest data from sources, including United Kingdom-based investment firm Farside, shows the Grayscale Bitcoin Trust losing just $170 million on March 22. The United States Spot Bitcoin Exchange-Traded Funds, ETF, have been at the center of attention for arguably the wrong reasons this week. Inflows have declined significantly versus the start of March, while GBTC outflows hit record highs, producing 5 consecutive days of net reductions in assets under management. The timing appears not to be random. Bankrupt crypto lender Genesis is rumored to have been selling its GBTC position throughout the week. Should this now have concluded, downward pressure on ETF trends could ease. Net flows out of the Bitcoin ETF dropped to $51.6 million yesterday, helped by a big slowdown in GBT selling. Investor and entrepreneur Alistair Milne noted on X about the flows data. Momentum turning. The pivot point theory is also shared by statistician Willy Woo, creator of on-chain data resource Wooble.
Look, we've seen it at scale in the underperformance of active versus passive. What that is the battle of the generations, because the boomers hold active funds. That was the way of investing in the past. The kids, their kids, own passive. And we've seen a switch that passive is now larger than active. Active portfolios underperform over the long run. Why? Because there's a relentless sell from the boomers as they release capital from their retirement assets. And the millennials are offsetting the flows, but in different things, which is kind of what Jamie's talking about, because what we're going to see is this also offsetting of flows in this new asset class. So you're muscling in this new asset class in the middle of this. And don't forget, there's 86 million millennials in the United States alone. It's actually larger than the baby boom cohort. They just don't have as much money. But in an asset class that's earlier, the size of the flows is still enormous. And then you've just given the boomers a chance with the ETF. So, there's a lot going on. And these demographics is everything. I realized this in the end. Almost everything that we do in markets is actually demographics driven. We're just trying to overcomplicate it all.
In a recent X post, Wu revealed a new model comparing ETF inflows with BTC price action. While he did not give specific information on which data is used for the metric, he suggested that the most intense phase of offloading might be over. According to this new model I've been playing with, the worst of the sell down in this first phase of the consolidation may be over, he commented. I'm kinda expecting consolidation to run right into the halving, thus more choppiness through April. In his own assessment of the week's flows, he remained optimistic on near-term BTC price action, suggesting that tailwinds for a return to price discovery could be in place by next week. Now, we'll most likely have a sideways weekend and potentially consolidate a bit more next week before the path up to new ATH. Lots of people shaken out, lots of people waiting for lower. With current emissions schedule at $64,000, we need $57.6 million of inflows per day to scoop up the daily mined coins. In less than a month with having that total is $28.8 million. Others were more critical of GBTT, which now retains barely half of the AUM it had when it converted to an ETF in January. The whole ecosystem is going to be much healthier when GBT has zero AUM. Crypto author and educator Vijay Boyapati argued on March 23. It was the product at the center of the 2022 market collapse, and it's the product whose net outflows are the biggest headwind to Bitcoin now. As a whole, the spot Bitcoin products represent the most successful ETF launch in history. Since they began trading, cumulative flows have reached $12.15 billion. Earlier, Cathie Wood, CEO of one of the ETF providers, ARK Invest, said that the bulk of institutional exposure is still to come. And do not forget to subscribe to Bitcoin Seller. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.